Hello everyone, welcome back to the channel. So you all know that we have been doing this series of top MCQs for the accounts, right? So today again we are going to discuss 10 most important MCQs in relation to the account subject, right? And this is the fourth part of the accounts, top accounts MCQs, and you have to do your best in these 10 most important MCQs, right? And you have to give answer to each and every question that I am going to ask from you. Okay, so the first question, without delaying any further, let's directly jump to the first question. But before that, let me know in the chat section कि everything is good to go, if my voice is clear to you and also my video is clear to you. Okay, so let's do our first question of the day, that says advance to supplier account is what? Advance to supplier account is what? See, we have different type of accounts in the accountancy, right? We have real account. Real account means the accounts which has some worth, the assets account, we include them into the real account. Now we have some nominal accounts as well, like we have income account, we have expenses account. So we have nominal account, we have a real account, isn't it? And we have some personal account as well. Now personal account means we have some natural person account, we have artificial person account. Natural person means like Mohan account, Sohan account, isn't it? And artificial person means XYZ Limited, the company accounts we have, isn't it? So the question is asking you ki advance to a supplier account. See what happens whenever you have any expense or any income, na, just remember this trick कि whenever you have any expense or income, that is going to be included in the nominal account. But whenever you put any prefix or suffix in this nominal account, like let me give you the example of rent account, suppose. So rent account is a nominal account because it's an expense. But suppose you have prepaid any rent, so it will be like prepaid rent. So whenever you prefix anything in the nominal account or you suffix anything, that is after this rent, when you put anything like rent accrued, so in this case that becomes your personal account. Please remember this thing: outstanding rent, prepaid rent, interest accrued, all these are personal account. Why? Because they are representing someone, right? Like this, in this question we have advance to supplier, so we have given advance to our supplier, isn't it? So this advance is representing that person as our debtor, so it will be included in the personal account. So the correct option would be option number C, that is personal account, right? Okay, so let's come to the second question of the day, that says which of the following transactions would cause a damage, not damage but cause a change in owner's equity. See, we have the balance sheet in which the left hand side is your liabilities and equity, isn't it? You know this thing. And we have the asset side when we talk about traditional balance sheet, not as per the Companies Act 2013. See, in the liabilities and equity side, what do we have? We have shareholders fund, isn't it? And inside this shareholder fund, what do we have? We have share capital, right? We have reserve and surplus as well. Now question is asking you which of the following transaction would cause a change in owner's equity. So owner's equity includes your share capital as well as your reserve and surplus. So the first option is repayment of a bank loan. So when you pay something back to the bank, for earlier you have taken a loan from the bank, now you are repaying it, so it is not affecting your share capital, or for that matter it is not also affecting your reserve and surplus, right? So owner's equity would not be changed. Owner's equity means here it is shareholders fund, right? So it would not be changed. Now when you pay dividend, second option says payment of dividend. See, when you pay dividend, you pay out of reserve and surplus only. So yes, this is going to impact your value of shareholders fund because reserve and surplus are included in the shareholders fund, or we can call it owner's equity. So yes, payment of dividend would be the correct answer, but let's read out the other option as well and try to eliminate them as well. Sale of land on credit. Now when you have sold your land, obviously your asset is going to decrease, right? And you are going to increase your cash, so it is not going to impact your shareholders fund or owner's equity directly, right? Now the fourth option says, third option is also eliminated. Fourth option says purchase of asset and incurrence of liability, again it is not going to impact your shareholders fund. So the correct option would be your option number B, that is payment of dividend, right? So this is the format of equity and liabilities, inside which we have the shareholders fund, not all the format but only the shareholders fund that we have already discussed here, right? So share capital, reserve and surplus, and one more thing we have, that is money received against share warrant, right? Okay, now the third question says, which of the following is true with respect to providing depreciation under diminishing balance method? See, we have different method of depreciation, isn't it? Now in these methods we have the most popular method as straight line method, then we have the diminishing balance method. So a question is asking you which of the following is true regarding the diminishing balance method. So in the diminishing balance method the rate remains same, right, but your depreciation gets decreased each year, like this. Let me give you the example. Suppose you have the machinery of worth rupees 1 lakh, right? So on the first year you have charged depreciation of 10%, right? And you are going to write down your value as 1 lakh minus 10,000, because 10% of 1 lakh is 10,000, isn't it? So you have the machinery value now, brought down value of machinery as 90,000. So on the next year, in the next year again you are going to depreciate your 90,000 by 10%. Now your depreciation is 9,000. This is the diminishing method. But as far as straight line method is concerned, here what we are going to do, it is very simple. So suppose you have 1 lakh rupees of asset, now you are going to depreciate it with 10%, that is 10,000 each year. So each year you are going to depreciate the value of asset with the rupees 10,000, isn't it? So option says the amount of depreciation keeps increasing every year. No, not at all. In the diminishing method it decreases every year, right? Second option says the amount of depreciation and the rate of depreciation decreases every year. So the first part is correct, the amount of depreciation decreases but the rate of depreciation remains constant, so it is also incorrect. Third option says the amount of depreciation decreases while the rate of depreciation remains the same. So it looks correct. Why? Because the amount of depreciation decreases, yes, absolutely, and the rate of depreciation remains the same. So it is absolutely correct. Now D option says the amount of depreciation and the rate of depreciation increases every year. No, not at all. So this option is also incorrect. So your correct option would be option number D, not option number D, but option number C, right? This one, option number C. I have ticked it here, right? Okay, let's move ahead with our fourth question that says, while filing the declaration of solvency of the company, the accompanied affidavit must be signed by at least dash board of directors. So nothing very technical here, pure theoretical question. You have to mug this up, right? So for filing declaration of solvency now, the affidavit must be accompanied by the sign of 2 directors. Okay, so it must be signed by the 2 directors at least. So the correct option would be here option number B, directly 2, right? Option number question number 5th says dash means quantification of business transaction. See, we have economic events, we have business transaction. So the question is asking you, dash means quantification of business transaction into financial terms by using monetary units. So just what you are doing, you are just converting your transaction, or you are trying to identify at which value you are going to write your transaction, at which monetary value. So the question asking what you are actually doing. Are you identifying the transaction? No, you are not identifying the transaction, right? So the first option would be eliminated. Are you just recording? No, it's a transaction. Obviously it's a transaction, but when you quantify any transaction, when you quantify it, you are not this is nothing to do with a transaction. So the correct option would be option number D, that is measurement. Why? Because you are quantifying any transaction, right? Suppose you are calculating the depreciation, so you are calculating 10% of it, 10% of the asset value, so you are trying to quantify it. This is called measurement of the business transaction, right? And option number E is also eliminated, that is communication. So the correct option would be option number D here. Okay, question number 6 says, as per Companies Act 2013, there must be a gap of dash year or years between grant of option and the vesting of option. Now see what happens. You have something called ESOP, that is Employee Stock Option Plan. So the question says there must be a gap of how many years between grant of option, between this day and between the vesting of option, when the options have been vested. So as per the Companies Act 2013, minimum year should be 1 year. So option number E would be our correct answer. Okay, everyone is clear about that. Now question number 7 says recording of capital contributed by the owner as equity. See what is happening here. We are having a company, right? We are having a company. Now we are investing in our own company. We are bringing suppose 2 lakh rupees in our own company, but company is going to consider that capital. Company is not going to consider that asset as a cash. No, though it will be included in the cash as well, obviously, because we are giving or we are contributing cash, but they are also going to include that into the capital side. And that's why the question is asking recording of capital contributed by the owner as equity. Equity means equity and liability, we place it on the same side now. So whatever capital we have introduced in our company, that is also a kind of liability for the company itself. They take it as the liability, right? So question is saying it is due to the principle of what? It is due to the principle of double entry? No. Going concern? No. Separate entity? Yes, absolutely. Separate entity says that the shareholder, right, and the company both are different entities. Both are different entities. So if we are as a owner, we are contributing something, so company is going to take it as the liability only, because they have to return us, right? Just like they take bank loan, isn't it? But the difference is we are going to show it as in the capital, right? Okay. And in the case of bank loan, we are going to show it in the outside liability, or you can say liability, right? So the correct option here would be option number C. Okay, chalo. Question number 8 says Mohan account is what? Is it a type of natural person account? Is it a type of artificial person account? So we have discussed in this class only what is a natural person and what is a artificial person. So it is definitely not the artificial personal account, and it is definitely not the representative personal account. Real account it is not. Nominal account are only accounts that are related to the income and expenses. So the correct option would be natural person account. Easy question, isn't it? Okay, let's move ahead with the 9th question of the day. This says long-term assets that have no physical existence, but are rights that have the value. So now the question says ki they are the long-term assets, but they have no physical existence. If they had been in the physical in the physical existence, then we call them tangible asset, isn't it? So now they are not the tangible asset. So tangible asset is obviously not the option here. Okay, don't worry. Current asset? No, it is not the current asset. Fixed asset? No, it is not. So the opposite of tangible asset. So the opposite of tangible asset is the intangible asset. So we have the answer as option number C. Very, very easy question, right? Investment? No. None of the above? No. So the correct option would be option number C here. Okay. Let's move ahead with the 10th question that says, important question, very, very important question. Opening stock 50,000 because it's a numerical. Sales 1,60,000. Freight incurred 10,000. Sales return 10,000. Gross profit on sales 60,000. Net loss for the year is 10,000. Purchases is 1 lakh rupees. Purchases return is given to you. You have to find out operating expenses. So very, very important question it is. So see, what do we do while preparing our trading and profit loss account? See, this is the format of trading and profit loss account. Let's understand this in a good way. So this is the debit side and this is the credit side, right? Now, first of all, what do you write here? In the debit side, you write opening stock, isn't it? Then you write your purchases. You also write your freight charges, and from the purchases you also deduct your purchase return, right? On the credit side you write your sales and you minus your sales return, isn't it? Now If your income is more, your expenses are less, then you are going to have gross profit, right? And this gross profit on sales is directly given to you as 60,000, isn't it? Now you are going to write your 60,000 here, okay? And you have also closing stock here, right? That's how you calculate the gross profit. Now this gross profit comes here, isn't it? It is brought down on the credit side. Now you write your all the operating expenses on the debit side, and whatever profit you have, now you write it here as net profit, or you can call it operating profit. Though after the operating profit you include your non-operating income as well, but in this question we don't have any non-operating income, right? And non-operating expense, we don't have anything like that, so we can consider directly it as net profit. Okay, but the question is saying, see, you have net loss for the year, so that means there will be no net profit, it would be only net loss, isn't it? Now gross profit is directly given to you as 60,000, so just write it here as 60,000. Now this will be balanced, you know this thing, right? In the accounts these will be balanced because net loss is your balancing figure, right? Net loss is directly given to you as 10,000. Now tell me what should be the operating expense so that this gets balanced. So this is 70,000, so obviously total of this should also be 70,000, so your operating expenses must be 70,000 only, right? So your operating expenses would be 70,000. Now look at the option 50, 60, 70, so option number C would be your correct option. So it might be done with other method also, let me tell you that as well. So another method is you prepare all the trading and profit loss account. So this is not necessary. See, in this question I have told you how to do this in the minimum time possible, because you have been given the gross profit and you have been also given the net loss. I have directly calculated the operating expense, right? Now in this you can also do it by preparing the complete picture, like opening stock you can write, purchase you can write, less purchase return you can write, and then freight incurred you can write, right? And you have the gross profit with you in this question, this 60,000 you can write it as well, and sales return and net sales, then you will have the closing stock as your balancing figure, right? But then also na, the answer would be same, you just have calculated the total of trading account, it doesn't matter. Why? In this question the question is not asking you to find out the value of closing stock, right? If it had asked you to find the value of closing stock, then it would have been necessary to prepare this completely. But if directly gross profit is given to you, you can directly do this as well. So in the exam you have to save your time, na, because you have lot of questions to do, right? So in this way you can do it directly. But if the question says you find out the value of closing stock and this operating expense, then you have to calculate from beginning to the end, then only you can calculate this closing stock by doing the balancing figure, right? Okay, so we have done the answer of this question as well. Now this is the homework question, and this you have to answer me in the comment section. Look at this question very carefully, important question with regard to the phase 1 examination, not the phase 2 type of question. It says internal users of accounting information include what? Internal users. Are they short-term creditors? Short-term creditors are included in the internal users, or the customers are, or the long-term lenders are included in the internal users, or shareholders, or the debtors? That you have to give me in the comment section. Okay, so we have done 10 questions, and this question was your homework question, right? So that's all for today. We are going to meet in the next lecture. Tab tak ke liye tata bye bye. Thank you everyone.